Good afternoon, everyone. This is Henry with Simpler Trading, and in tonight's free video, we're going to pick up where we've left off with some of our analysis in the SPX. Those of you that follow these videos will remember the last conversation that we had where we discussed the 618 retracement that came in for the little bit of a double top here, just shy of 4,600. From there, you move down into the 1272 of this swing low against this swing high, just about perfectly made that extension. So that is to say that this product has been respecting this form of technical analysis, and you've got a really interesting way of mapping out today's high that you'll want to carry into tomorrow. Now for me, this is always the most important swing to run. And it's part of what I enjoy about symmetry analysis, because to look at this and say, okay, this is your trend line, I don't find to be especially helpful. I think it's somewhat subjective. It can kind of show up in various spots. The angle of it is a little too extreme to be helpful, I think. But you can look at this and say, that is the bearish trend. So inside that bearish trend, I would like to look at bullish advancements. And the move that terminated the rally is always important to me, or just the inverse, basically the last trending move. So if we compare that, and we're just going to use this three-pointed tool in Thinkorswim, but we're saying this was a certain point advance. If we compare that to the advance off of the lows, isn't that kind of fascinating to see what you find? The high from today's session was 44.01, and the symmetry is 44.02. So there's, a few relationships in here, but I believe this is one of the most important, and it's part of why coming into Thursday, I think that will be a key and pivotal level. You could also take this swing high against this swing low and notice the confluence of the 618. So just in the exact same way that we're studying this ratio when it came into here for resistance, right? That was off of this high and this low. Well, now we're making that same comparison as far as the ratio is concerned, but it's from this swing high to this swing low. So suffice to say, another very important area that this could fail from. So between the 21 EMA, symmetry, and your 618, all coming to a head at the 4,400, that's going to be an important level and very likely in focus as you get into the end of the week. So that's the SPX outlook, and I also wanted to give you guys Tesla one more time. I know we looked at this in Monday night's video, and it's been hanging in there pretty well, but I don't think it is done just yet. The signal that I would have you focus on is showing up most cleanly off of the 39-minute chart. I like the 39-minute because it divides the 390-minute cash session into evenly divisible bars, and I think sometimes just shows you a little bit better signals than you might get on the 30-minute. But what I'm always looking for are these squeezes and a pattern where I feel like you had the great shove up off the lows, you had a trend follow through move here. This is all basically consolidation and something that I believe will be good for one more leg higher. You've got Thursday and then Friday of this week's action, and that's where I'm trying to get Tesla up into. I do think that if you get there, you have to acknowledge it as being a very important area of resistance. Notice there at the 900, the volume that was transacted at that level today. So with a few assumptions in mind, but if you think that that's generally retail buying that, you're going to think that funds are going to try to defend it. So, you don't have to use all of this to make your trading decisions. You can keep it simple and say, I think you buy Tesla as long as it's above 850 for the move into 900. But there's just several pieces that I think fit well with that. That'll be easier if the S&Ps are above the 4,400. But these are two main places that I'll be focusing on. And at the risk of giving you kind of a longer video tonight, there's two other charts that I just want you to carry forward for yourself. I can't guarantee that these are going to yield great results, but I do think they have potential. And it's another spot where you can look at these clean, symmetrical relationships. So right this second, ISRG is at resistance, right? Because I'm comparing the advance that preceded the decline. That relationship, along with your retracements, gives you a zone from about 208 to just about 300. Your next would be, let's call it 310, and then where I think we could actually get a trade it will move into is going to be 325. So inside of this work, pullbacks, because if you fail, like say you open up at this resistance tomorrow and then begin to sell off, well, I'm going to buy that 21 EMA, and as long as that holds, that's my leniency for staying in the trade and trying to get that daily squeeze to long. So that's one to just consider. And then DraftKings to a lesser degree. Of the two, I think that reversal pattern in ISRG looks much more promising. But in DraftKings, it's got a little bit of the same thing going here. Notice that 8 moving average crossing above the 21, and then I'll try to buy the pullbacks to the 21. So that inside a squeeze might be good for a push into something like 27, and then ideally trail it up from there. So I hope that's helpful and you find these concepts useful in your trading. Have a great rest of your afternoon, and we'll see you at the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com. And I hope to see you in the chat room sometime soon.